We will start with Boston Consulting Group Matrix, and I'm pretty sure that you've heard about that. But when I'm going to explain the model, my goal is not only to explain you what the model means, but also to talk to you about how this model can be used in advanced performance management questions in your exam. So please pay attention to this practical approach. So when we talk about Boston Consulting Group's model, what is it about? It's about analyzing the products or projects or companies depending on their market growth, so the prospect or the future prospects, and the relative market share. And this model works just perfect for divisions. Therefore, this model is tested as part of divisions, which we are going to learn much later. And also, this model can be applied when we talk about companies. So what is the idea of the model? Well, the idea is that if your market share is low, and if your growth potential is low, okay, so this means that basically your product is dying, and it's called by this fancy name dog. And what does it mean? It means that probably you need to stop investing. You don't need to hope for any revenue increase. So basically what you want to do, you need to make sure that your cash flows are positive or profits are positive. And that is very important to understand so that you set your performance measures accordingly, because if you set wrong performance measures, well, for example, for the product that is already dying, you are going to set some targets such as revenue increase, then your managers will be demotivated and they will just not just do anything to reach those targets, because they will know that they just cannot do that. If your market share is low, but if the potential, if market growth is high, this means that this project is a question mark. It is a question mark because we do not know if the market share is still low. So maybe the project will just not have enough volume, enough output to cover the fixed cost, and therefore it will still be unprofitable and it will still lead to losses. However, it may as well be that the market share will be good enough to recover fixed costs, and therefore the project would move here, so when it's going to have high market share, and will become a star. And star is a very nice type of project. This means that the project already has quite high market share and it still has high growth potential. So this means that you can invest. So this means that you are going to expect increase in revenue, increase in market share, and this is the types of KPIs that you're going to set. If your project has still high market share, but the growth potential is not very big, it's reducing because, for example, the market is saturated. Like, for example, with Big Four audit companies, there is no market growth, but those Big Four companies, they have a relatively big market share. So this means that this project or this company is a cash cow. Cash cow means that it does not really need much investment, but it brings stable cash. And that cash is going to be used to finance some other projects. And this Boston Consulting Group Matrix can be tested almost anywhere, because you will set, when you set budgets, you will need to understand at what type, at what stage that project is or the division is to choose the right type of budget. If we talk about the company, you would need to look at this model to understand what types of metrics to select and so on. So when we talk about cash cow, what can we measure? Well, we measure revenue we measure that revenue is greater than a certain percent, or for example, the growth in revenue is higher than inflation rate. We can measure profits. We can measure some maybe how company retains its market share so that it does not fall into being a dog, does not lose its market share, something like that. So in Boston Consulting Group's matrix, the analysis will be taken at two levels. So it's product or service level or division level. And brands and products will be examined to determine the current position and prospects. And please don't think that each and every product should be a cash cow. Cash cow is a great product because it has high market share and it has a low growth potential, but it doesn't really need that because it is still profitable enough. But each and every product has its life cycle. So this means that eventually cash cows will become dogs if the product is not changed so that it becomes a cash cow or a star again. So as for the product, the company's portfolio should be mixed. You need to have some question marks, which can later become stars. You need to have stars because you need to grow your cash cows. You need to have cash cows so that you can finance some other projects. And as for dogs, well, dogs is just an inevitable stage of a project, but as long as dogs bring extra cash, as long as their net cash flows are above zero, then it's okay to have them because you can use the money elsewhere. The other level is corporate level. So your strategic business units will be analyzed so that they're balanced. You have that broad explanation of the model in your textbooks, and please understand that in advanced performance management you are not asked to explain the model. You are asked to explain the mechanism of the model, and it will take you something from 2 to 3 lines to get a mark. And you need to explain mechanism, which means you need to explain the features. So when we talk about Boston Consulting Group matrix, we say that this is a model that helps the companies to analyze its products, services, or divisions or strategic business units based on relative market share and based on market growth. This helps companies to set appropriate types of KPIs and use appropriate budgeting approaches to motivate managers better. And that is enough with the explanation. And as for whatever is in your text, this is just for your understanding. So you will be given sometimes you are given some market shares or market growth, and if market growth is 10%, it's usually considered to be a high market growth. So star are those products that have a high market growth, so 10% is high enough. And as for the usage, so you will talk about proper distribution of resources. You will talk about that cash cows and dogs need to provide cash, so the company needs to make sure that this cash inflows are sufficient to finance other products or other business units, and the portfolio should be balanced. So we use Boston Consulting Group matrix analysis to assess trends, to evaluate competitors, and to evaluate risk. And it is important, once again, for advanced performance management exam, because we need to understand what types of metrics to assign and what types of budgets to use. And we will talk about types of metrics later, and we will talk about types of budgets later. Okay, so this is Boston Consulting Group's matrix, and we will come back to this later, but it's very important that you understand that model.